So yeah, basically how we're currently doing is our our 90-day daily volume is around 3 4 like million a day. On that, we make 7 6 7K a day, and it's been trending up. So that was 90 days. 30-day, we're making 10K a day this last month and a half, and volumes like 5 6 million a day. So we're just trying to grow that and grow that pie up slowly, and it's kind of trending in the right direction. And
welcome to another episode of BitCast. I'm your host, Jason Kam, aka at Maple Leaf Cap. Today is July 4th, 9 a.m. Hong Kong time. BitCast is being live streamed to BidClub members. Questions are from the members and my own. This is not financial advice. Today I'm speaking with Jay, the co-founder of Definitive. Jay, welcome.
hey, great to be here.
Yes.
And happy America Day in Singapore.
America Day soon in the US. I guess it's now in Hong Kong.
Tomorrow morning for us. Yeah.
Very, very, very soon. I guess to start, for those that, I mean, people might have used your product, but maybe just to start, can you walk us through the math on the path on the trading volume and then how you generate sort of 5,000, 25,000 US dollar of revenue per day?
Yeah, totally. So, is it fair to assume kind of the listeners are familiar with like the product, kind of what we do, or should I give you guys like a quick 1 2 liner?
Yeah, if you may.
Yeah, and so the quick TLDR here, and the team story is important. As my co-founders and I, we've been in the space like 6 7 years. This is my second startup. Sold my first one to Coinbase, and while at Coinbase, we were building the institutional trading systems that some of the biggest players in the world use. Like when you hear Michael Saylor T-whopping billions of dollars of Bitcoin, they're using the stuff that half the team that works at Definitive has built in the past. So when we were there, we realized a gap in DeFi, which was like the same kind of institutional grade infrastructure was missing for trading in DeFi. As you're aware, and most of your readers are aware, you go to like a Uniswap type UI, you choose token A, token B, you swap it, kind of executes, and that's it. You don't know if you actually got really good execution, if you were protected from price impact and slippage, if you got MEV'd, and then after the trade is over, you have no idea like what you actually bought or sold. Reporting and all of that is a mess. So kind of the genesis of this company and the idea was to build this end-to-end solution for more of the advanced and sophisticated traders who are operating in DeFi, and give them a very similar experience to what they're used to in CeFi. And so that's just quick one-liner or a few lines on what we do. And so how we make money, is on similar to exchanges. We're definitely more of an aggregator than exchange. We're not an exchange. We're hooked up to 100 plus dexes on 7 8 different chains now. We add new chains all the time. But how we make money is on fees, on volume based fees. And we have like a fee tiering similar to exchanges. So more volume you do, lower the fees. And we have our token edge. So if you stake our token, you also get additional fee discounts. So you can kind of find the fees in our page. But let's just say on average, for some of our advanced orders, it's between 15 to 25 bips. So if you do like a TWAP order, stop order, take profit order, stuff that you don't often see in DeFi, which are common in CeFi, those are the typical rates. So basically how we're currently doing is our 90-day daily volume is around 3 4 million a day. On that, we make 7 6 7K a day, and it's been trending up. So that was 90 days. 30-day, we're making 10K a day this last month and a half, and volumes like 5 6 million a day. So we're just trying to grow that and grow that pie up slowly, and it's kind of trending in the right direction. And how does this? So just to kind of give you context, like basically, I think 10K a day in fees is I think roughly like 3.5 4 million a year. in revenue, and so, we're hoping obviously by end of year to more than double that and get on par um, for like a 10 million, run rate. That's kind of our, main goal by end of year.
Got
And
it.
so one thing, what you'll find interesting is, um, we've onboarded something like 70, 80,000 users, but actually the ones that are actively trading are, our metrics are all transparent. So they're in the hundreds. So I think
They are.
the lever for us to grow is so these are all really high value users. So, we've talked to probably 100 different liquid funds, and 20, 30 of them are actively trading. Yeah, you guys do it. And, people like, Coinbase Ventures is, they have their own exchange, but they actually use us for on-chain stuff. So we have a lot of these high value traders where, the average trade size is like 40K, not, $40 or $100. So we have a pretty good stronghold on the high value side, the larger side of the market. And that's what our product was built for. But, we've done a lot of self-reflection, and I think the goal of this is to tell you where we lack as well, to see and to show the listeners on what we're trying to prove is, we were kind of like caught off guard by the growth of like Pump Fund and, the token launch pads. And so while you can trade any asset on any chain, we're optimized for trading these assets in size. And, let's say, if someone launches a token now, yes, you can trade it on Definitive, but we're not super optimized for trading something that's like 50K market cap or 100K market cap. And what we found was that kind of this new breed of degens that were part of this cycle. So the 2021 cycle, like they were trading the DeFi 1.0 apps, like the Uniswaps and, the 0x's of the world, matchas. And those users get our product and they use it. But this new breed of traders who came on who are just like punting on the pump fund coins and, all the launchpad coins, they're just different breed. And our product wasn't optimized for them. And so we've been kind of focused on, making our charting faster. Like our goal is from contract address to swap in, under 10 seconds. So if someone sends you a contract address on like a TG chat or somewhere, you should be able to swap on Definitive in no time. So we're making a lot of optimizations to do that. And we're launching like a mobile app as well. So we're kind of going after, we have a good stronghold and great product for large institutions. We don't have a great product, or we didn't, for like brand new trench traders. And so we're definitely starting to compete there. Slowly, we started the Avalanche actually, because I think in Solana there's Axie and Photon. So on EVM it's like wide open right now, and so we're really focused there. We started with Avalanche. We have great relationships there with the team, the foundation and people in that ecosystem. And now we're gonna expand that product to Base, etc. We support these chains, but we weren't hyper optimized. So to kind of put this all together, right? We have few hundred active traders like every day. We have a lot more traders, but like ones who are really trading are like less than 1,000 a day. But they're very high value. With some of the changes that we're implementing and some of the marketing and some of the tokenomics, I think there's room for us to really grow that number. Like the product's there, the tech's there, and with some of the new things we're launching, I think we can easily 5x the number of traders, which easily obviously leads to growth in revenue as well.
That's very helpful. I guess on the sort of product feature and product capability side of things, like what's the timeline on this push of kind of a refreshed experience?
Yeah, so I mean it's kind of an everyday thing. Like every single day there's something small that comes out, which it's a culmination of a lot of small things that will lead eventually to something that's very competitive to Axiom or Photon. And I would say that I think timeline we're aiming for is maybe, at this point, like end of August. So another like 2 months or so where we'll probably be like 90-ish% of the way there or even further. And our mobile app's actually already developed, App Store approved, etc. So that plus some of our differentiators, like we have a cross-chain swap product coming out, etc., which will make us basically the only place where you can trench, but then when the coin goes up and you want to sell it with a TWAP and you have $1 million of it, you can also TWAP it. So we'll probably be the only place where we support the entire life cycle of the coin from the second it's launched, to the second it grows big, and then you really need all the advanced execution that we built and the insto grade features. And I can talk about some of like the technical differences and why that's important as well, if you'd like.
Yeah, I guess for a trencher who is like kind of just watching the tape every day, what can they do, I guess, by early September that they can't do now in definitive?
Yeah, so some of the kind of main features are like right now we don't support trading pre-bond tokens. So that's something that we'll support. So the token has to be bonded
That's a
to
good start.
trade. Yeah, so that's obviously, kind of the one of the first and the most basic things. Then there's just a lot of so like in the trench use case, people they have a lot of presets where they're just like, I want to buy 0.1, 0.2, 1 SOL, etc. There's like preset buttons. You can click them, the trade executes ASAP. So that's something we're building. So just to give you context, and this is a little technical, but when in today's definitive product, when you go and execute a trade, we do pre-trade simulation. So why that is important is because we go and simulate whatever you're trying to buy and ensure that you're actually getting that token back. And so what that means is that adds latency, but that protects you from, if you're trading $1 million, we don't want you to get honeypotted. We don't want you to get MEV. We don't want you to lose money in slippage. So we simulate the trade, but simulation adds latency. For like a new trench coin, which is like 100K market cap, it doesn't matter. You just want to like trade really fast and execute, right? So because we built the product for people who are trading 100K, a million, we had to build some safeguards in the execution to ensure that they're getting the best execution. We're quoting from market makers like Wintermute and all these people. We're getting, we have RFQ with them. Obviously for trenching, none of that shit matters. Like you just want to execute fast. So there were just some trade-offs that we made for a specific user segment for specific assets. And we have to kind of redo that for the trenching use case. So basically there's a lot of, so what can trenchers do? Trade as fast as they can on Photon, like have presets, ensure their orders always fill, have basically take profit, stop loss, etc. What can they do that they can't do on Photon or Axiom? One big thing is that they can go cross-chain. So because we support all these chains, they can ape something on Solana, something new comes out on Virtuals, and they can go from like pump fund to Virtuals in one swap in one place, which I think is extremely powerful. No platform has Solana and EVM right now. So that's kind of one thing. The second thing is that once the token actually goes up in value, so what some of the existing platforms do is they have integrated one specific DEX, and all trades execute on one pool of that DEX. So once the token actually gets big, and let's say you own 1% of the supply, and you're actually selling it on that one pool, you're just getting crushed, right? Like the price impact is terrible. So with Definitive, you can actually use our smart order routing and make sure that you execute across every venue and get best execution. So when you're actually selling the token that has gone up in value, you'll like save a lot of money on it. So I think those are like a couple of the low level features. Then we also have a mobile app coming out, so now you can again do this on your phone, cross chain, and ensure that you get like actually the best execution for this. So again, like I was saying earlier, like we were targeting the trading larger size, but now we'll probably be the only place where you can go from like basically the second it launches to the second it hits like millions of dollars, and ensure that you get really good execution, good trading.
Do you expect I guess $10 million of revenue a year, it would be about 30K US dollars a day, just about. Versus at one point you were hitting 25 to 30K. There was a point in time. I guess when you get from 2 to 4,000 today to like effectively 10xing your revenue run rate, would you expect the composition to be mostly made out of kind of the pump fund trenchers versus the institutionals today?
Yeah, for sure. So I think actually right now we're at like 10K a day. But yes, like at the peak, we were doing like 40, 50K a day even some days. And obviously like this is where I think we'll get to the end of the year, and I think we'll grow a lot more from there. Right? Like walk, crawl, run approach. But yeah, so the composition, I guess the insto flow right now is probably more, what we're seeing at least is more concentrated in like the larger cap coins and like Bitcoin. In Jan and Feb, all the instos were aping like every AI coin, right? Like our virtual ecosystem, AI16Z, all those coins were like all actually insto bid back then. So I think that like that there maybe has to be like a true like on-chain narrative right now, where I feel like the instos that we're seeing at least are like maybe more defensive right now, because they're like, okay, I'm gonna buy Hype, I'm gonna buy Bitcoin, whatever, like maybe some revenue generating. Syrup has been really popular. I know you had sit on here, and so there have been some of those like coins that have been very popular, but those are, in terms of volume, the instos are just buying and holding it. They're not like actively trading it. While like in the AI days, they're actively trading it. So I think what we'll start to see, to answer your question, is greater growth from like the kind of casual on-chain trader, on-chain degen, who's maybe like using some of the other apps. I think they'll kind of come to us. And the other thing that's going to be really cool about what we're building, two other things actually. One is I'm sure you've seen like the fees on some of those things, like it's like 1% a swap. Like you get absolutely housed. I think one thing we've learned from being in Coinbase is we're here to build this for the long term. Like if traders and users just get screwed over in 2 months and lose their money, they're never going to come back. And so, we want to make it fair. Like if you just stake our token, the fees go down. Like the fees will be, 50% less than what some of these other people are charging. The other cool thing is this technology update that we've made is that in those other platforms, you can only sell into SOL. So like you buy some shitcoin, you have to sell it, and you want to buy another one. You have to sell to SOL, and then you have to rebuy with the SOL. So effectively, you have to do extra trades. And on each of those trades, you lose money. You lose 1% on each of those trades. So we're building something with our trench mode where you don't have to do that. And you can go from like any to any, which is, I think, also a huge unlock. Like once people realize it. So I think what we've found so far is like, to some degree, like, the meme cycle came up, like trenching came up, and people haven't actually like thought about all the ways that they're getting screwed and losing money. And now they're like starting, because it's chopping a little, the market's chopping, they're getting a little more educated into it. So I think there's a lot of education we need to do as well on like why, I'm telling you and you get it. You've maybe been in DeFi and this space for so many years, but someone who's new might not get it. So there's also this education side that we have to invest in.
Yeah. I guess it's cool that you integrated Hyper-EVM. And how's that launch gone since June 2nd?
Yeah, I mean, the honest answer there is there was a lot of hype, quote, no pun intended, through the ecosystem. Like myself, co-founder Dennis, we're both like very early Hyperliquid users and plugged in the community. And I think the first few days there was a lot of volume, then it's tapered off. And I think it's just because the ecosystem is, not that mature yet. There isn't, anything to really trade there. There's what I think Liquid is probably one of the main coins there. And, I think some of the protocols like Felix and stuff, I think when they launch their token, that's going to really spur that ecosystem into life. Because right now, there's just not that much to trade on Hyper-EVM itself. right? Obviously,
Yeah.
people are trading Hype, people are trading Unit on Hypercore, but on the EVM, there's just not that many assets. So, but we don't care, right? Our bet is we'd rather be early, we'd rather be first there. Once the ecosystem comes, we're ready from day one, and we
Yeah.
can support any asset on there.
Yeah. I suppose it's kind of a good segue into the next question, which is the discussion started occurring with Hype being its own sort of layer one exchange with allegedly ultra low latency, and there are a few other players coming out that are trying to give a run on the money from central exchanges. All of them, have this cloth design with a layer two roll up kind of look and feel to it. Do you feel like that overall design, like can you port your entire stack onto that design, or is that something that's just orthogonal to what you have already built?
I guess, sorry, just like port it over to like integrating like a club. Is that?
Yes, or a better way to put it, like I can run a TWAP on Hyperliquid, for example. Not that
Yes.
they will support the spot tokens on everywhere else, but I suppose with all these exchanges that have a similar design, that's like beefy burly, like. Can I still use your tooling on those, exchanges?
So great question. So, I would say for the product, my co-founder, Dennis, worked at Tagomi, which I don't know if you remember Tagomi.
I do.
And so Tagomi, for the listeners, was like one of the first crypto prime brokers. And Tagomi, what they did was, they integrated all the CeFi exchanges, and the Coinbase bought them. And so if you think about like Lighter and Hyperliquid, they're essentially, they operate, look and feel exactly like CeFi exchanges. There's an order book, etc. Same logic. So we actually have probably one of like the best teams in the world to build that layer of integrations. We don't have it now because right now we integrate, with AMMs and like mark some on-chain RFQs. But yes, like in the future, we want more clubs. Like that's good for us. We want more those sort of exchanges because we have the expertise and the people who know how to build, the best way to like execute across all those exchanges. So we haven't done it yet, but that's something we want to do later this year.
Is the fee you charge still 15 to 25 bips on those exchanges?
I think it'll change for like a order book model, but we aren't there yet, so I don't know what it'll be exactly. But yeah.
And the cross chain swap that you have is, sorry, I'm jumping around. It's also turning on by August.
Yeah, so it's pretty close. I think cross chain swap we're hoping for end of this month. So it should be live by end of this month.
And just so I understand, it's like I have a Fark coin on Sol, and then I want to ape into virtual on Base. I just run a TWAP directly. It's like, okay, same account, and just clicks trade, and it happens. Is that right?
Yeah, exactly. It happens, and then it's settled on Base, so you'll end up with virtuals on Base.
Oh, wow. Okay.
Yeah.
That's cool.
So you don't have to bridge. You don't have to bridge. So why that's cool, again, for the listeners is cool. One, you don't have to bridge. Two is you don't have to worry about gas, right? Normally, you have to bridge, make sure you have gas, etc. Again, you don't have to do anything. You just click a button and then it'll just run. It'll show you the status of it running. And once it's run, you'll have the asset on the other side.
I like that. I think it's slowly reaching sort of the features that people want. And then I guess your target for the end of the year is getting to 10 million annualized run rate revenue. It's a little hard to look longer term because things do change quickly. But if we were to look at 2026, like what else do you have planned in your mind that really excites you?
Yeah. So, I mean, I'll say is like we kind of see it as a few phases, and I'll go through end of 2025 into 2026. So I think our kind of the first phase that we're trying to like hit from now till say the next 8 weeks is goal is like CA to trade in under 10 seconds on any chain, on any pre-bond token, on any token. So that's like what we're working on right now. That gets us like basically gets us the trench features we're lacking and highlights what we're strong at, which is like the larger side thing. So it makes us like a full-fledged platform and feature complete. So that's kind of the first area. I think the next is we want to, unlike some of the others, we actually have a live token, Edge. So we want to use that token and basically create like a token flywheel. We make revenue, a lot of interesting things there we can do with our tokenomics to, drive value to our users and to our active traders who are on our platform and give back to them for using it. So definitely want to invest in that because that's something we really can leverage. Then kind of the next goal is to start integrating these other clubs and these other venues. So basically make sure that if it's on chain, and it doesn't matter if it's just an ERC20 token, if it's an RWA, it's a stock, whatever, and it's on chain, it's tradable on Definitive. Like be quote unquote the definitive best place to trade on chain, any asset. And I think a good trend there is we love that more is moving on chain, right? Like stocks, I don't know how big that'll be or not, but just RWAs, et cetera. There's just more types of assets coming, and that's just good for us and good for our business. And then another thing is like we have launched actually an API. It's in early days. So we built this infrastructure now that I've told you where you can trade any token on any chain, you can cross chain it. We have P&L reporting. So we've had a lot of other projects reach out to us. They're like, wow, like we're building an app. We want to enable some trading in the app. How do we do it? Can we integrate you? So I think this, good learning here is from the Hyperliquid team where I think building your first party app is cool, but to really scale, enabling other people to build on top of you is even better, right? Because that's just flow that comes to us. So that's kind of another lever that we're pulling. And then finally, our vision from day one has been not just spot trading. It's been basically structured products and perps as well. So I don't know if we'll get there this year. I think we're just laser focused on like winning on the spot side, but later in the year, or if we have more resources, we want to enable perps and enable structured products. So some cool things that we could do that others probably can't do on the structured product perp side is because we have spot on all these chains, we can actually run like very interesting basis strategies where you're holding some spot asset on Solana and running the short on Hyperliquid, and we're completely managing all that collateral for you. So we can run basically basic strategies across chains because of how our infrastructure's settled or other sort of similar structured products. So again, that is probably pretty far out, but it's all things that we are slowly building towards, and hopefully we'll get there.
How got it. Okay. I guess how would the trenchers know about your product? Like, how do you plan to reach them?
Yeah, I mean, that's a good question. And that's the hardest question in kind of all of this, right? Like, I think building is clear and we know what to do and we can execute it. So yeah, I think a few things on like how to reach these users. I guess one is we've had a lot of success partnering with foundations, protocols, new projects. So for example, we have very good ties with Solana, with Base, with Avalanche, where the foundation has supported us as like a new product, and key people in the ecosystem have supported us there. So I think one thing we found is like if a new product, so same thing happened with Hyper-EVM, and maybe that's how you heard about our launch. So the key is like when a new project or a hot new like meme coin launches, we really try to partner with the team and offer like free trading for that coin or something, and have that coin market to their users like, hey, use Definitive to buy, it's free. So basically partnering with new projects and new coins and new memes that are launching has been very effective in the past, and we want to like continue doing that because it's really cool when it comes from the project itself to their community. Helps us onboard users. I think second is what I think the Axiom team has done incredibly well has been like their referral and growth mechanic. Like, no one knew about them 6 months ago. And they've done really well with like incentivizing their existing users to refer others and giving extremely lucrative referral bonuses and that sort of stuff. So I think these are things like both Binance and Bybit did in the early days as well, and stuff that we've really studied well. So that's obviously something that we're looking into. I don't want to share too much there, but we have our own like program that's launching, and it'll also tie in directly to our token. I think 3 is just one way to grow is obviously this sort of stuff like podcasts, community. We're like doxed US based founders. And I think we need to really leverage that more. And we've been already doing that, like a lot of in-person events, that sort of stuff that we've been doing. I found that some of the other projects that do this sort of thing, like their founders are all like anon still, and they haven't put their name out there. So, which is good. I mean, they've crushed it. They're great products, but I think there's strength in just putting your face and name out there and, showing the community that you're here for the long run and you're not just here to kind of make a quick buck. So yeah, those are some of the things we're doing. And yeah, we have like a dope marketing team now and something we've hired for, which we didn't have earlier. Ex Compound finance team, actually marketing lead who joined us to lead our marketing efforts. And we got some dope degen interns and stuff. So we built that part of the business as well. And a lot of stuff that's coming
recent
down the pipe. That was probably the last like 4 to 6 months where we like hired, built a team, etc.
Okay. And then on the referral side, you don't have a referral program previously.
We do right now, yeah.
You do now, but not. Okay.
I think we did have one like a while ago, and then I think we need like all these programs need love and need to constantly iterate as the market changes. So we had one when we kind of started. It's still there, but it needs like a full refresh, I think, to be competitive with what's there now. And our focus really has been last 6 weeks into the next 2 months. The summer has just been like heads down. Like let's make sure the product is there because no point doing marketing and spending money on it if people come and they can't trade instantly and achieve that same experience that they get elsewhere.
Got it. Okay. And then would the referral program be net inflation? Would it cost inflation on an edge? Okay.
Yeah, no inflation, but I don't want to share the details there, but no inflation on edge.
Makes sense. Okay.
Yeah. And I think anything we do, by the way, like going forward, will not have, I think our goal is to not have any inflation on edge.
Got it. And full-time employees, you have like do you have to sell tokens, and how does that all work on the cost side?
So we're funded, I think we raised like 10 mil across like 2 rounds. So, I mean, in terms of run rate, I guess if that's kind of what you're asking,
yes.
Let me just pull it up. Give me a second.
Sure.
We have 14 full-time employees, a few contractors. I think, our burn is basically on par with what we're making right now in revenue.
Currently. Okay.
Currently. So maybe the burn is like 20% higher than what we're currently, making in revenue. That being said, to be clear, like obviously the hope is we increase revenue significantly and then drive a lot of that towards the token. We just don't want to do it too soon, right? There's this fine dance of we want to ensure that we're actually growing and have started to achieve product market fit before turning on things like buybacks. Because doing it too early is just it's gonna hurt us more than anything else. And that being said, we have just off our like venture funding, we have 20 months of runway just off of that. If I don't even take into account any of the revenue, so basically we're in a good spot to not need to use any edge to pay for operations. And again, the hope is we won't need to if we continue the same trajectory.
Yeah, and there's no equity entity sort of siphoning capital, cash flow.
Yeah, so
right? It's a pure. Yeah.
correct. Yeah, there isn't. Yeah, so I mean, there is a U.S. equity entity and a Panama token entity,
Yeah.
but yeah, so U.S. equity entity is what raised like the venture funding, and that's what it's running off of right now. And it doesn't, there's no, it does have an edge allocation, but that's all publicly disclosed. Contracts are disclosed, and none of that has been touched.
So when you reach 10 million ARR, like not even run, like actually you're annualizing, and let's say 3 to 4 million of bodies cost, the remaining $6 million of cash flow flows to the treasury, and then that would just can be redeployed into token if you so choose, effectively. Yeah. Okay.
Exactly.
Okay. Interesting. I guess I mean here's kind of a left field question, because the tooling here is quite good. Like we use it. A lot of times when things are not listed on Sexus and I don't want to bridge around, I think, by the way, one of the other cool things is we do have prime brokers, like Galaxy, FalconX,
Yep.
Anchorage. Some of the new stuff, you need to get it approved. And the approval time could take, 4 hours up to, I don't know, weeks. But on you, like there's no need to bridge, and then you kind of just plop your dollars in there and you can start TWAPing. I think that's what's been driving a lot of the volume from institutionals. But it's really good tooling. I guess what's going through your mind at the time when you were launching a token? Because it would feel like, it would feel to me that when the U.S. is no longer a country that goes against crypto and tokens, you already see an M&A spree that's kind of happening in the market. And I guess you can't predict this, but now you might have bidders and buyers that really like the tooling and they want to be a part of their offering. Do you feel like having a token would prevent you from getting acquired, for example?
Yeah, I mean, I think good question. So I guess I'll give you the kind of historical context here is both myself and my co-founder Dennis had gone through like prior acquisitions, and we've been through like the equity acquisition process. I think one of the reasons to like start this company, I think, was maybe not to just get immediate, like we knew exactly what to build and have very strong team, was not to actually get immediately acquired. Like actually was to go like the full path, the crypto native path with the token. So that was just motivation for what the vision we pitched to ourselves, our investors, our team, why we got them on board. So I think one of the reasons was yes, we wanted to stay true to the vision and why we launched a token. I think second is that I think today, yes, it's probably complicated to acquire a company that has kind of the equity entity, has a token. It has been done before. I think Coinbase acquired some like security company recently. I forget what they're called. So it has been done, but it's probably a little complicated. There are some protocol buyers as well that operate in the trading in the DEX space. For them, it's less complicated, and they might not be US based, and they're more open to buying other projects with tokens. So there's that new category. But if you think about it, say 12 months from now, where again you just said the US has become more friendly, maybe more projects and more teams and more things are tokenizing faster and sooner. I think there'll be new frameworks created to make sure that these sort of companies can get acquired. So yes, I think today itself maybe it is maybe hard for like a Coinbase or like a Kraken or something to acquire a company with a token, but I think that is changing pretty fast.
Yeah. Okay. I suppose, let's say if you do get to your target and then you will be profitable. I totally get why you're not doing it right now, because it just goes up and down. But let's say you start building a treasury, like business is actually pretty good. How would you actually think about the capital allocation of the treasury? The edge holders probably have to vote on it, but you can guide them towards what you want them to do. There are many models. The most aggressive would be what Hype has done, but there are other ones. Like in your mind, what would be the most ideal case for edge?
Yeah, I mean, I think I think it would depend on obviously how much or okay, a few things. One is what are other growth levers we want to invest in that could continue to grow the business, um, and that require treasury money. So just for example, some things that when we actually started this company, we were actually more focused on yield. We actually pivoted into like a pure trading based thing. So we've always we've kind of thought about how we can build this place where you can have yield, lending, perps, and spot. So if we want to expand in other verticals, right, you need money to do that. So there's always kind of this trade-off between using the capital for growth versus directing it all, into edge. And so that's like one part of the calculus. But I think at the very least, we want to once we get to a good spot, drive at least 30 to 40% of what we're earning towards edge. The better we do, the more we can drive. Ideal. I don't because we're obviously Hype is extremely unique. We are VC backed. There's just different calculus here. We probably can't do 97%, but
Yep.
if it up to me, if we can get to 50% or even a little higher than that, I think that'd be extremely awesome.
Understood. Interesting. Okay. I mean, it'll take a while. It'll probably be like this time next year if you get there.
Yeah.
Okay. Is there anything else?
But I think we want to
covered?
start sooner.
Yeah.
We want to start it
Okay.
sooner. Maybe we start with 5%, 10%, scale it up from there as revenue scales.
Got it. Okay. We covered quite a bit. I mean, it's kind of blocks and tackling. There's like no one big thing that could get you there. I think like improving trench mode would help, but there's the cross-chain swap we talked about. There's the API access we talked about. There are like a bunch of features gets you to like decent feature parity. Is there anything else that we haven't covered that kind of is an exciting internal effort that you thought you should cover?
Yeah, I mean, in terms of the product side, yeah, I think those are probably kind of the majority of the things that
Yeah.
we've talked about, right? Like, I'm a strong believer. Like, it is a culmination of small things that add up. Even if you look at Hype, right? It was like, hey, they had good liquidity, they had the HLP vault, they had amazing UX. Just like small things add up. Like they were, it was a perp dex. Like had been done so many times before. And so I think it's kind of similar here. I think one other factor for us is partnerships. So, for example, I won't name them, but we have a couple basically big OTC desks that use us as their DeFi execution backend. So actually, they're on their Telegram, they're getting requests from the clients, and they're actually just executing on us. We're talking to exchanges who want actually to integrate our offering into them because they want to support DeFi. So those are like some things that can really get us to some exponential growth. In addition to just what we're doing, like partnerships and integrations with other players who have like a very strong CeFi offering, but want a DeFi offering. And then the question is, should we spend all this time, effort, money building it, or should we integrate with someone, or obviously buy someone?
How soon do those get turned on, you think? The large.
So the OTC desks are pretty quick. Like, there's no, they just use our app. Basically, we have a partnership with them. They just come. Their traders use our app. Yeah.
Yeah.
The CeFi stuff it's long. Like that's like maybe 6-month type timeline stuff. There's a lot of DD, contract audits, compliance checks. Like it's not, it's not quick.
Got it. And I take it you're not allowing for trading on central exchanges anytime soon.
Again, it's not right now. It's not on a roadmap, but I think what you mentioned, what a lot of the others have mentioned, are they saying, listen, if the coin's on CeFi, we're just going to use it on CeFi. We use you guys for new coins or coins that have more liquidity on DeFi. And so maybe at some point, CeFi and DeFi are just generally converging. So again, it is on our, like maybe our Q4 or longer term roadmap, to integrate CeFi. But then the question is, if you have Hype and Lighter and some of these venues and they have all the CeFi assets, do we even need to integrate CeFi? Like we'll probably just be fine integrating Hyperliquid and a few of the other, co-op dexes that are coming out, which essentially just offer CeFi liquidity and the same market makers.
Got it. Makes sense. Let's see if the group has any questions. Give me 1 second. No, I think that's it. Look, Jay, I really appreciate your time. I mean, good luck on getting to that 10 million ARR target. I thought it's such a stealth launch with your token. I don't think a lot of people actually know that you have a token. Funny enough. But
I don't know if that's good or bad, but
yeah.
I think up only. That's
yeah,
the
up
hope.
only listing and sort of the ARR itself. But really appreciate your time, and we'll talk soon.
Cool. All right, man. Thanks a lot. Take care.
Thank you.